Hi, welcome again to another edition of Market Analysis Pre-Market for today, December the 6th. I'm Giovanni Betancourt, trader, operator, and analyst with Vantage Markets. Now, markets are getting restless. They want to get to the bottom, but as long as the data point to a resilient U.S. economy, that won't happen. The service sector's activity unexpectedly picked up in November, data showed Monday. With Friday's stronger than expected jobs report still on investors' minds, it was enough to spark a sell off over fears the Federal Reserve will need to be more aggressive with rate hikes. Investors are waiting for the cumulative impact of the Fed's hiking to hit the economy and therefore to signal a pivot on the horizon. The Fed's expected rate hike slowdown next week doesn't appear to be under threat. Traders are still pricing in a 0.5 percentage point hike at December's Fed meeting, with a 20% chance of another supersized 0.75 percentage point increase. Now, that's a high probability given that the Fed Chairman Jerome Powell has signaled he's ready to slow down. The central bank will also want to avoid over-tightening, especially given the lag of its hikes hitting the real economy. However, recent robust data do have implications for the Fed's longer-term stance. Powell was keen to stress the likelihood of a higher terminal rate than previously expected last month. A resilient economy certainly points to higher rates for longer. The Reserve Bank of Australia raised rates again Tuesday and warned more hikes were to come. Governor Philip Lowe said the path to a soft landing was a narrow one, yet Powell sees a soft landing as very plausible for the U.S. economy. For the foreseeable future, good news for the economy will be bad news for markets. And with that being said, let's take a look at what we can expect in today's markets activity. We're looking at the Dow Jones, a daily chart, and we see that the Dow Jones, the last 3 days, the last 4 days, counting today, has seen some red, has been in red. This is a 20-day moving exponential average. Now, it's below the market, so it can act as a dynamic support. I have my support at 33,620, which is where the moving average is above. So it could act as a nice area to find that support. The RSI, well, the RSI is not even close to being oversold. So there could be a lot of room for the market to come down towards. But obviously, first it needs to break through the moving average and also to my support. Let's take a look at the S&P. S&P, the same token, the 20 exponential moving average is below the market, acting as a support, dynamic support. My support is 39.50, which historically, last month, it was really a nice place for it to be at. Okay, it was really respected by the market a whole lot. So let's see if it will continue to hold water. Let's take a look at the NASDAQ. NASDAQ, the 20 exponential moving average, also below the market, also acting as a dynamic support. And we have the 50 exponential moving average very close to it. So that will be a nice area to consider for support. I have my support at 11,500. Then the Russell is a bit different. The 20 exponential moving average is above the market, which it will act as a dynamic resistance, and the 50 exponential moving average is below it, so it'll act as a support, and I have my support at 1820-ish, right around there. RSI still neutral, so that could happen. Let's take a look at crude oil. Okay, crude oil is a bit different. All right, so crude oil, we had a nice rally yesterday, up to 83, where then we started to sell off. That sell-off has taken the market to fluctuate below that $76 where it started the year, and therefore we could most likely contemplate that the market will come down to retest the low of the 20th of November. That's where I have my support. RSI still shady from being oversold, so that could probably be the case. So sell-off on crude oil. Obviously, we understand that over the weekend, the OPEC said they're not going to modify the quota. They're going to keep obviously the same. And then the EU come out and give that cap of $60 on Russian oil, but Russian oil is already being sold below that. And so we could probably Will they bring the price of crude oil down to 60? Uh, that could be the case, but first we need to obviously come and break this previous low. If we do break this previous low, the next support will be the psychological $70 support level. Okay. Then we have Nat Gas. I see Nat Gas trading above $5, between $5 and $5.50 for the remainder of the week. Then we have copper. Copper is also looking. I'm looking at copper to stay steadily right around the 380. Do a nice consolidation, nice ranging just below my resistance within the range of yesterday. That's what copper is going to be doing today. RSI is still neutral. Then we have gold. Gold also just looking to stay steadily around below 1780 for now. If the dollar index happens to fall, then we probably see gold do rise up to 1800. RSI is still neutral. Silver, on the other hand, silver is steady looking to hold above $22, right below 2250. So that's that channel. That's where it'll probably be consolidated or just trading in between those levels. Then we have the euro. The euro is looking to hold right around 105, 105-ish. Okay, so looking to see it'll hold 104, 500 is my support. Pound, the pound is looking to stay above or around 122. I have my 121.50 support. As long as the dollar index continues to stay above 105, we'll continue to see those markets stay steadily. If the dollar index happens to do just fluctuate to a lower, come down below 105 towards the 104.50, then we could probably see a nice jump on those previously mentioned assets, gold, copper, perhaps even crude oil, the currencies. All right, that's it for me today. Have a nice day. I'll see you tomorrow.